Hi, Derek. You
Hi.
ready?
Yes.
All right, awesome. And yeah, hello, good evening, everybody. Welcome to our investors CopiTime. CopiTime. Always always talk about CopiTime. I think we missed CopiTime already, right, Derek?
Yeah, man.
Oh,
Yeah,
you
we
still
have
okay
been.
lah? Oh, Singapore,
Singapore
you
still
still
alright.
okay
Yeah,
there?
Singapore still alright, but I think Malaysia is
Yeah,
better
yeah.
still at home.
We are now going to an extended MCO. We are gonna be in curfew from 8 p.m. till 8 a.m. Nobody can go out that time.
Oh, really? Ah?
Yeah, yeah. Starting
Oh,
tomorrow.
wow. And it's until 14th of April.
Yeah, the next 2 weeks.
Oh, okay, okay.
I mean, until the MCO is over, lah. We do not know when the MCO is over, lah.
Hopefully by 14. Hopefully.
Hopefully. All right. Anyway, guys, welcome to our session today. It's going to be on about technical analysis or chart analysis. So it's a technical Monday. We're going to have this every Monday. And we've also fixed every Thursday to be a crypto Thursday. So you want to
Oh,
know about cryptocurrencies, you can join us on Thursdays. We got a very special guest tomorrow. I will basically announce this when we at the end of this live. Um, but today, because this is the first day that we're going to have these sessions, I'm just going to explain to you a little bit about technical analysis first, right? Because I'm sure there are a lot of questions about whether technical analysis is all mumbo jumbo. It's people always sell it as a secret to investing. It's a tool that you must have make decisions and so on and so forth. But we wanna answer these questions to you, right? Because for me, it's about how you apply technical analysis to make investment and trading decisions. All right. Today with me we have a special guest as well, Derick Tan, who is a cycle analysis. So I'll explain to you why cycle analysis is also an integral part of technical analysis, lah. Right. So later he'll explain to you what is cycle analysis all about. And then give us about 20, maybe 25 minutes. I'm going to explain to you. Derek is going to explain to you about cycle analysis. And then we will get questions from you guys. So if you have any stocks or any commodities or any indices that you want us to analyze live for you, just key in the comment and then we will try to analyze for you. Right? But
yes.
before we start, if you want to have an access to equities tracker platform to look at financial data for public listed companies, please WhatsApp us at the number 603-8040-2070. See whether we got correct now. 8408, sorry. This number 03-8408-2070. This is where you are able to get access or request an access for the EP platform, which is going to be until the end of April. So make sure you make use of this while we are at home so that you can
Mhm.
benefit and look for companies based on fundamentals. All right. We also have a lot of freebies in there, a lot of downloads that you can download so that you are able to also look at some of the information that we have shared earlier in our earlier live sessions, in our earlier copy time sessions. So just browse our Facebook and you should be able to see our all our previous recordings. All right. So let me just go through with you a little bit of technical analysis first, so that you have an idea what it's all about, okay, and how we use it to make decisions. Okay. So, Faiz, can you go to the slide so that I can show them right now? Share my screen. All right. So now, what is technical analysis, right? So basically, technical analysis is study of historical price over time, historical data, to forecast the next price or time action. Now, it's basically simple as normal as looking at fundamental analysis, because when we look at fundamental analysis, we try to look at company financials, right? But this is basically based on price movements, historical price movements. So what we try to do is try to analyze these price movements. Um, there are many tools to use it and to come up with certain expectations. All right, so I'm going to talk to you about expectations in a short while, what it's all about, because it's important for us to actually know how do we use technical analysis. All right, so we study the historical data, but of course, this is all historical. We cannot make any decisions when it's history. We can only make decisions what's going to happen next. All right, so that's the million or billion dollar question, right? So now technical analysis. there are two parts of it, right? Because when you look at a chart, there is price, there is time. Okay, so when we try to analyze price, how high is it going to go or how low is it going to go? We call it price analysis, right? We try to analyze whether price how high or how low. And the other analysis we can do is actually time analysis. That means when is the market going to turn? When is it going to go up? When is it going to go down? That is called cycle analysis. So for me, my focus is on price analysis. I don't do a lot of cycle analysis because there's a lot of work, right? This is where Derick expertise is, right? He will share with you cycle analysis. Basically, we can't be expert on both, like, it's quite
Yeah,
difficult.
yeah, definitely.
So it's good to have a combination of both. Then it makes it
That's
more
why you are
meaningful.
my buddy, man.
Yeah. So the objective of technical analysis is basically to understand how market behavior affects price actions. Now, this is very important because technical analysis is not about knowing as many indicators. People thought that the more indicators you know, the more you understand, right? In fact, the more indicators you know, sometimes you can be more confused, right? But sometimes, after using charts for a very long time, you don't even need to put the technical indicators in because you're so used to it, you can actually have certain outcome on the market behavior itself. Right? So the main objective is to know why price behave this way, why it moves this way. So once we understand why, then we are able to at least know what's probably going to happen next. All right. Now, these are some of the types of technical analysis. There are basically major three types, right? One is a price forecast. So we have actually indicators or tools to allow you to do price forecast, right? And there are certain tools that does not give you any price forecast, but they just give you indications like what's happening now, what is a trend, is the market rebounding, is the price having support, and so on. So it just tells you what is happening now, right? Forecast is trying to explain or try to forecast future price movements. And then, of course, the third part of technical analysis is cycle analysis or timing. When, all right, when the price is going to turn. So that's where Derick going to come in later. So why we use technical analysis? Now, there are two reasons why we use technical analysis, right? First one is to do forecasts. Now, forecasts are analysts' job, right? They need to forecast price movement. I mean, that's the reason why they are being paid, right? They need to tell you how high the price is going to go. Whether it's fundamental or whether it's technical, they need to give certain valuation to tell you what's the value of the price. In technical analysis, they will tell you whether how high the price can go or how low the price can go. So that's for analysts, right? So they need this kind of tools. Okay? And then the other part of using technical analysis is to basically make low risk investment or trading decisions. Now, this is where investors and traders take advantage of. We don't. For me, I always subscribe to the second one, which is using indicators to give me indications where the risk is low if I'm going to make a trade now. All right. And of course, we want to have low risk and a potential higher profits. Now, I'm going to explain that in a short while. Right. As a trader, I don't try to forecast that much. But of course, in this industry, I wear two hats, lah. Right. You can see my forecast on in the newspapers. You can see my forecast on conferences and so on. But again, forecasts are just opinions. Right. I rather basically follow the market. That means I understand a set of indicators. I follow it because I have certain expectations, and I'll share with you what's all about when we apply technical analysis. All right. So again, forecast is difficult. I mean, you can't forecast with very high accuracy. And I've been doing forecasts since 15 years ago. 15 years, I probably get maybe out of 10 calls, I probably get like 3 or 4 times right, right? And maybe 6 or 7 times wrong. Yeah, you can never get a good forecast. But when it comes to trading, it's a totally different thing, right? I can't mix these two together. Yeah, I need to make decisions on what the market tells me, yeah? Not my opinion, but what the market tells me, because the market is much bigger than myself. So, how technical analysis is applied? I'm just going to give you a very simple understanding about, for example, about trend, right? Now, let's say the average price is 1 ringgit, right? So let's say it's 1 ringgit. Um, okay, let's say the average price is where most of the traders are trading at 1 ringgit. But why are there times when traded or prices are traded above average, and why there are times when prices are traded below average? So it's very simple, isn't it? I mean, the reason why people are willing to buy and sell at higher prices because they expect the price to go higher, right? And that means they get information somehow that things that says that the price is going to go even higher, so they are willing to buy at higher prices, right? If most of the prices are traded below average, means what? That means they are not willing to buy at the average, okay, or higher than the average because they don't expect the price to go up higher. So basically, a trend is very simple in definition. If the price keeps on trading above the average, let's say 110 or 115 or 120, and most of the time it's above 1 ringgit, okay, then we have a bullish trend. That means everybody is bullish about the market, right? If it's below 1 ringgit, then most of the traders and investors are bearish. They are not willing to buy above the average. So that's the basic understanding. Of course, technical analysis is not just about trends. There are a lot of other things that you need to understand, like support and resistance, reversals, and so on and so forth. But I'm just going to give you some understanding. And once you have this simple understanding, we can actually try to use technical analysis to make investment decisions. All right. Now, look at this chart over here. This is actually a chart. I don't want to mention names here because it doesn't matter what chart you put on; they are basically the same. Because you see, the prices are determined by market forces, right? It's not determined by public listed companies, or it's not determined by 1 or 2 person, although it may sometimes be manipulated by a 1 or 2 person or a group or so, right? But generally, it's an aggregate of market actions, or whether from the buyers or the sellers. So remember, I told you about the average, right? So if you look at this here, there's actually this green line here, right? There's a green area and a red area. Now, in between the green and red, there's a line here. That's the 30-day moving average. That's the average price. All right. Average price keeps on. It's called a moving average because every day we have a new price. Then the average price is recalculated again, and then you get a new average price. Right. So that's why it's moving every day. It's moving because every day you have a new average price. So what happens here is this: if the price stays above the average, remember I told you, right? The reason why they are trading above average is because they are expecting price to go even higher. Okay. If the price is trading below average, which is the red area over here, it simply means that they are not expecting the price to go higher. The reason why they are buying at lower prices and selling at lower prices is because both of them are bearish. Okay. So like for example, in this period over here, it was bearish, and then the moment it starts to go and turn bullish, that means once it goes above the average, they have changed their opinion. Maybe something happened. There's a catalyst that actually push or change the direction of the trend. All right. So we have this bullish trend all the way up here until it goes below the average, it turns bearish again. Okay. So that's a simple definition using moving average. So how is it being applied, right? Now, for example, if you look at this one here, it's the same thing. The green line is the moving average, right? This is the price. Okay, so we all know that if the price is below the moving average, it means that the trend is bearish, or it's a downtrend because they are not expecting price to go up. Okay, so here, after some time staying below the average, the price suddenly start to go above the moving average again, right? So does this mean that now the investors and traders have changed their opinion? Maybe there's a catalyst. Why are they now starting to buy above the average instead of below the average? Something may have changed. All right. So when the trend has changed, right, what we can see now is here. Okay. When we do technical analysis, we are always able to see the historical prices, right? Historical prices. So I mean, historical prices is so easy, like you can know where the price is up, when the price is down. But always the most difficult part here is this right hand side of the chart, which is the empty space, lah. Right? This is where we wanna expect where the price to go. So now, if the price starts to break above the average, my expectation is this, right? This trend can continue if the price continues to stay above the average. Remember, right? Because as long as the price is trading above the average, that means the traders and investors are bullish. They're buying and selling at higher prices. Okay. Of course, if I'm wrong, the market has changed direction. If let's say, you know what, I think if the market starts to go down or the price starts to go down below the average again, it has turned in a downtrend, I have to make a decision. So now let's say lah, right? I really learned about this indicator and I want to apply a trading plan. The trading plan is this. Whenever the price goes above the average, I'll buy, right? Whenever it's below the average, I don't buy because it's a downtrend. But whenever it starts to turn above the moving average, that means the trend has changed. Let's say I buy over here, okay? So let's say I buy over here. And then what happened next? The price just went up for one day and then came down back again and now gone below the moving average. So the question is this, right? Remember I told you earlier, when I buy, I was expecting the price to continue going in an uptrend if it stays above the average. But now it's below the average. So what do I do? So this is where the discipline comes, right? If you have developed a trading plan, you're supposed to follow it. But again, a lot of people, a lot of traders, it's not easy to lose money, So sometimes you don't take or don't cut losses. Okay, that's where the dilemma comes. So let's say I follow. Okay, let's say never mind. I sell here, since the price has gone down below the average. I sell. Okay, and then when I sell the next day, the price went up above the average again. So what? Time to buy again, right? Okay. So again, I'm in a dilemma now, right? I bought earlier, and now it went down. I lose money again, right? So let's say never mind. I still follow, right? Because as long as the price is above the average, the trend or the bullish trend may still continue. Okay, so that's the expectation. You know what? The price went down back again, right? So how? Okay. Should I sell or should I wait? Because you see now you have to make a decision, right? Because this is the point where we make decision, not previously, not historical, but now is the time of decision. If I don't sell now, right, because it's already below the average, what happens if the price continues to fall even further, right? I'm going to lose more money. But what happens if the price starts to turn and continue to climb above? Okay, so I have this dilemma again: should I hold? Should I sell? So if you have a disciplined technical trader, right, if they were to follow, they will sell. Okay, so they'll do. So what they do is once they learn a technique, they develop a trading plan, and then they follow it, right? And first of all, of course, to find a good trading plan, you have to back test it first, right, and see whether it works. Okay, and then once you have back tested it, we have to what we call forward test it. Like what we are doing now, we are forward testing and see whether it works or not, right? So let's say this is the outcome, right? Out of the 10 trades that the trader do, he win 2 times, but lose 8 times. Now, question is, can you make money with this or not? Right? You only win 2 times, and you win 8 times. Guys, if you have any questions, just keep on asking there. I'll answer those questions to you. Don't worry. I'll just explain this finish first, then I'll answer your questions. Because there will be a lot of people thinking, asking about what moving average you use. Can you use FA to complement TA? I'll explain all that later. All right. So now let's say this one, right? We have 2 wins and 8 losses. So your probability of winning is only 2 times, or 20%. Okay, but the question is, can you make money, right? Now that depends, okay. If you look at the earlier example, okay, let's say, remember I show you that the first trade that the guy did, and then he lose money because the price came down, and then the second time, it makes a trade again, he buy again, and then after the next day is the price go down, sell again, so he lose 2 times. So this can go on, right? Maybe they have 8 of this kind of losses. But if you look at the price difference of the losses, they are very small losses, right? They're very small losses. But once they are able to catch a trend, for example, like this, let's say they buy over here, right? And this price is about 64 cents, and go all the way up here until the price goes below the moving average again at 98 cents. Let's say you make about 34 cents. Okay. So in other words, when you win big lah. Okay. When you lose small, right? Okay. And this is very common for any trend indicators. When you use it just as it is, your winning percentage normally is very low. You get more losses than winners, right? But if let's say you have a very good profits whenever you win, and that is strictly following, because you see, in this kind of trading plan, we don't try to forecast, right? We just make a decision based on what the market tells you to do. Whether if it's the uptrend, we can buy. If it turns to the downtrend, I sell. It's just simple as that. Okay. So let's say out of the 10 trades, every time when you win, let's say averagely you win about 40 cents, right? And when you lose 5 cents. Okay. theoretically lah. Okay, when you lose more because the moment you start to change direction, you cut your losses, you exit, and you lose 5 cents each. Okay, so if you win 40 cents in that two wins, you will make 80 cents. Right now, if you lose 5 cents each and you have eight losses, eight times five, you lose 40 cents. You still net about 40 cents. Now, bear in mind, right? We do not do any forecast at all. This is just basically following the moving average. Okay. Now, if you look at this, right, the reward to risk ratio is what? Okay, you win 40 cents, you lose 5 cents. So your reward to risk ratio is 8 to 1. That means every single dollar that I'm risking, there's the potential to make 8 ringgit. Right now, you'll be thinking, well, if that's so easy, everybody can follow, lah, right? Now, it really depends. Okay, one of the most famous group of traders that does this kind of trend following trading are called the turtle traders. Now, you can go Google, you just
Okay.
Google turtle traders. You either find people who actually really selling turtle, or the group of turtle traders. So make sure you look at those turtle traders, lah, right? Richard Dennis.
Make sure it's the right one.
Huh?
Make sure it's the real turtle
Make sure
trader.
it's the real one, not the one that's selling turtles, lah, right? Um, so they are very famous for this, right? Because again, they don't try to do forecast. They will go through the series of losses. Now, imagine you here, the statistics show that if you follow this, right, there's 80% chance that you're going to lose money, right? So now emotionally, it's going to be very difficult. But if you trust that one day you will catch the trend, because no, imagine if you don't catch one trend, right, you will never be able to recover your money back. You keep on losing, losing, losing. Maybe it can be like 3 or 4 times in a row, and then once you get a winner, you gave up because you lose 3 or 4 times already. Okay, then it's very difficult to recover back because that one trade could have made you 8 times more than your losses. All right. So of course, for me, I cannot trade this kind of trading, this kind of system lah. But you know what? This is basically the basics. This is where we start to do a lot of research, right, to actually improve the trade until we're able to find a plan which is suitable for me. Like for me, turtle trader is not for me. I cannot go through. The moment I lose 2 or 3 times in a row, I get panic. I get scared. I will not be able to do the next trade. So it's very difficult for me to emotionally to do so. But if I'm able to do so, I may be able to catch some big trends. All right. So most of the traders will try to find a trading plan for themselves. It can be a combination of many other indicators, right? So in developing a trading plan, the trader attempts to do these two things, right? One is to increase the wins over the losses. That means your winning probability gets.
Oh, I think Danny is gone. So anyway, ladies and gentlemen, I'm Derek. So can you all hear me? Okay, if you can hear me, can just key in the chat. Hi. All right. So I think Danny, probably because of connection, he uh, will be just away for a while. So I'll just come back. Before he come back, probably let me just continue. So what Benny has shared is about the technical analysis part, which I myself also does technical analysis. Of course, on top of technical analysis, I specialize in this form of analysis called cycle analysis. All right, so I do know technical as well. How I do my own trading is I actually combine TA or technical analysis with CA or cycle analysis. Both of these actually will enhance my trading probability of winning. So anyway, Benny is back. So back to you, Benny.
Sorry, guys, I don't know what happened. I just got kicked out. I know. I don't know. Maybe some of you guys want to kick me out and talking too much.
No lah, back to you.
Hold on, ah.
Yeah.
Oh gosh. Can you hear me, Derek?
Yeah, can hear you.
Okay, hold on. I think my screen just hang. Can you just entertain them for a while?
Okay. So anyway,
Just,
uh, I've been traveling with Benny basically around the whole Malaysia because we speak for different broking houses. So that's why uh, I know that he does TA very well, and of course he know that I do CA. So actually we are kind of we complement each other. Also, even like come back to me is for me. Or sorry, can show my slides since I'm talking. Is it possible to show my slides, Faiz? So I'll just show my slides. In case you guys don't know me, so probably I will just do a very short introduction about myself. My slides. Give me a minute. Huh? Benny is back.
yeah, sorry.
Benny is back.
Okay. Where was I? Okay, talking about
You say you want to belanja me meal.
yeah, yeah, that one definitely lah.
No, back to you. Yeah.
Okay, hold on. Yeah, so the trader always attempt to increase winning probability, right? And to of course increase the winning sorry, the reward to risk ratio as well, lah. Right. For me, I always try to find a balance between both because when you try to find higher winning probability, you'll be doing more trades normally, and your reward to risk ratio will also be smaller because you tend to take profits more often instead of riding on a trend, right? Because the only way you can make a lot of money is when you actually ride on a trend. But you can have a combination of both. So you need to have a balance. So for me, I mean, I've done, when I started technical analysis, I spent like, between 4 to 6 hours every day trying to test indicators, trying to test systems until I actually find one which is suitable for me. All right. So now let's say lah, okay, giving you a scenario where um let's say your reward to risk ratio is about 2 to 1. That means whenever you win 2 ringgit. Whenever you lose 1 ringgit. Okay. Now with that in mind, let's say in a conservative bad scenario where you have in a period of time you have 5 wins and 5 losses, right? 5 wins and 5 losses. So can you still make money or not, right? So if you win 5 times, but every win you win $2 and every losses you lose $1, you make a total of $10. Okay, 5 times 2 is 10. And whenever you lose five. So you lose $1. So you lose $5 in total. So you take 10 minus 5, you still net a 5. And that is a time when it's a bit uncertain. You only win 5 times and lose 5 times. But what happens really in the bad market? No matter what you do, also it's very difficult to make money, right? You win, let's say 3 times, and you lose 7 times. Okay, that's where you probably just lose a little bit because you win $6 and you lose $7. But when the good time comes, okay, let's say you win 8 times or 7 times and you lose only 3 times. So you win a total of $14 and you lose only $3, right? So the reward to risk ratio is very important, and this is what I think for those who are using technical analysis, this is the most important thing that you have to consider before you make a trading decision, right? When you make a trading decision, if let's say you are risking $1 because your risk is almost certain, right? When you buy, you put a stop loss. Okay, later when we do examples on your stocks, I'll give you some opinions, right? What would normally a trader do? When you risk $1, is there a potential to make $2 and above? Right? If I make a decision where my risk is $1 and my potential profit is also $1, then I will never be able to make money because I need to get very high winning probability, right? Which is very difficult. Yeah, but if I can win 2 times more than my losses, then even with a 50% chance of winning, 5 wins and 5 losses, I can still make my money. Okay, so technical analysis, right? Again, it's not something which is magical. It's not something where it's so easy. When I started learning technical analysis, I started to learn about the MACD indicator. right? MACD, I'm sure you know MACD, right, Derek? Because
Yeah,
that,
MACD, yeah.
yeah, 20 years ago is like it's like magical, right? I mean,
Yeah,
um,
man.
the guy will tell you, you know what, golden cross. That means the line cross up, you buy, line cross down, you sell. It's like so easy like that, right? Um, but then after that, and then you find out that once you start trading, it doesn't work that way. Okay, because all the examples they make was a winning one, but they didn't show us the losing ones, right?
Hmm.
So technical analysis is all about this. Okay, is about number one, understanding market behavior so that we can make certain trading plans. Okay, and your trading plan has to be tested and it works before, and then you apply it, and you have to apply it with discipline, because this is a problem when you don't do forecast, because I do not know when the winning trade is going to come. I need to get ready all the time, right? Even though I have to go through one or two losses, because I know the next win is just around the corner, right? So that's a bit about the technical analysis. Again, I'll join with you next week. Again, you have any questions, I'll answer you. Now I'm going to go to the next part, which is cycle analysis, right? Remember, technical analysis is price analysis and also cycle analysis, right? So cycle analysis is to tell time, okay, like when is the next one, when the price is going to turn and so on. Okay, there are two different types of cycle analysis. One is a fixed one. Yeah, I'm sure you heard about the 10-year cycle, right? That means every 10 years a cycle is going to happen, something is going to happen. So that's fixed every 10 years. Or some of them will use the general election cycle, let's say for maybe 4 to 5 years. So it's also fixed every election. Okay, that's called a fixed cycle analysis. Okay, the other part of analysis, cycle analysis, is a dynamic cycle analysis. That means the time is not fixed. It is based on set of indicators, right? And this is where Derek has come in, because I'm not sure about Derek, but for me, I don't believe in fixed cycle analysis, lah, because the market is not so rigid, it's not so fixed, lah, right? It's not so easy to. So there are so many other factors that actually factor the market cycles, right? So Derek has done a lot of research on cycle analysis, and he basically have come up with his own cycle analysis, which is dynamic, it's not fixed. So maybe Derek will want to explain to you about his cycle analysis.
Okay. Uh, can just show my slides. Sorry. I opened it already. So,
Okay, Faiz can show.
okay. Just like what oh wait, Terry, you need to open your slide. Yeah, I opened already. My slide is open.
Okay, can now can.
Okay, na.
Mm.
Wait, Okay, so let me just show my slides. So now, to me, cycle analysis is actually a field of study in analyzing recurring pattern and repetition to forecast timing and turning point of different investment asset classes. Like what Benny has shared earlier, in cycle analysis, there's actually two forms. One is the what he mentioned earlier, the fixed cycle, 10-year, 20-year, or 7-year, this or this. Then there's another form of so-called cycle analysis known as the dynamic cycle analysis, whereby this is something that I actually went to US and Europe to learn about this and actually brought it back to this region. So I would say I'm one of the very few trainers or speaker. I can't say I'm the only one. Probably a very handful of speaker or trainer who talk about this cycle analysis, especially this dynamic part. All right. So let me just give you an example of how cycle dynamic cycle chart look like. All right. So now, this is a red line. This is the so-called the intermediate term dynamic cycle chart, which was crunched a few days ago on the 25th of March. All right. When I say intermediate, probably I let you guys know my definition because I believe Benny has his own definition of time frame. I have my own, so I just let you guys know my definition of my time frame. So anything less than one month, I will call it a short term. So it could be a 2 weeks. It could be one day, or even can be scalping or intraday kind of thing. So then intermediate term is from 1 month to less than 1 year. All right. So then long term is from 1 year to less than 10 years, and ultra long term is 10 years or more. So for my dynamic cycle chart is for intermediate term, so it's for 1 month to less than 1 year. Okay, so now this is the intermediate dynamic cycle chart of Dow Zone. So first, how is this cycle chart being generated? So you all don't just see it's just one red line. It's so simple. But to come up with such a chart, it takes me 30 minutes for each chart. And this chart is generated by I input decades or even hundreds of years of historical data plus the future market data. I take all this past historical data plus future market data, I put it into this software, and it basically takes 30 minutes to do all the crunching, all this thing, and finally I come out with this cycle chart. So now, for the cycle chart, I have to let you guys know, like what I mentioned, cycle analysis is about timing and turning point. So for the cycle chart, there is no y-axis. Unlike the price chart, the y-axis is so-called the price. The x-axis is the so-called the month. This how it works for price chart. But for cycle charts, I don't have the y-axis. I only got the x-axis, which for this case, you see over here is February 01. That means 1st of February. Then over here is 1st of March, 1st of April, 1st of May. So over this stretch here is actually for the month of February. Then this was for the month of March, and this is for the month of April. So how we look at this cycle chart is we look at timing and the turning point. So we can see that there's a turning point around here, or that is towards the end of March. All right. In fact, I publish my cycle chart every month. Actually, last month my cycle chart already forecast there's going to be a turning point in Dow Zone or the general U.S. stock market in late March. Also, it has been so-called confirmed this month that we will see a turning point near March. And once we have the turning point ready, then probably we'll see the Dow Zone move either up or down. All right. So now the important thing is once we know that there's a turning point towards end of March, then let's go and take a look at so-called my price chart. So we are now looking at price charts real time. Benny, we can see the charts, right?
Yeah, we can.
Okay, good. So now I'm showing you guys the so-called Dow Zone charts. Oh, sorry. Let me just log in.
Okay, while Derek is setting up his chart, I'll just try to attempt to answer some questions. Now, can I? Let me take a look. Oh, that one is for Derek. Okay. This is Joe Kwa. How old is Benny? 20.
Huh?
Well, guys, I'm past 40 already. I have two children who has gone to high school, so I look
Wow,
young,
so
but
private data also can share one.
uh, yeah, Derek. I think there's one question here. Maybe you just want to talk about because when you're presenting your cycle, right?
Mm.
Uh, One question is how come your data come out May data also
May data.
the chart? Yeah, I mean because your chart goes up to May, right? So they're
Yeah.
wondering why it goes until.
Uh, because like what I mentioned, cycle analysis is to do forecast of the timing and turning point. That's why we have a turning point around so-called end March, and this later part after March this is actually April. Also, this is the part that my cycle chart can do forecast, because cycle analysis, part of it, it's not only about turning point, it's also about so-called forecasting the direction of so-called certain asset classes. All right. So since we talk about this, probably I'll just go back to the so-called down zone price chart. All right. So in fact, very nicely on the over here, we can see, probably I just put on the marker here. This is actually 23rd of March. So like what my cycle chart forecasted, it has a turning point here, and most probably is it has a turn up. And in fact, for last week, we have 3 very strong days, and it actually went up, down zone actually went up 24% until a pullback in so-called last Friday. All right. So in fact, it has my cycle chart has called for a turning point. Yes, around end March, and it materialized. And it seems that now, if the down zone can break this high of 22,585, so it may have a chance to go even higher. And my cycle chart seems to suggest that that probably may be the case going forward, at least for the next 1 month, for the month of April, provided that this technical so-called resistance over here, it can be broken, as well as this green line over here is actually the 20-day moving average. Provided that this resistance and this 20-day moving average can be broken, we should be seeing down zone heading higher from there. So this is how I can combine my cycle chart to tell me the turning point, and then based on the technical chart to tell me the entry or as well as the exit. So this is how we do it. Yes, Benny.
All right, Derek, there was one question yesterday. Talks about
Yesterday.
you want to know the oil prices. Can
Oh,
you give a comment on oil prices and where your cycle analysis look like?
okay. Since we are talking about that, so ladies and gentlemen, probably we look at the cycle chart of oil. Yes, this is a cycle chart of oil. All right, you can see here oil. So it is suggesting that probably we're going to have a turning point. All right, probably also towards the end of March, or we probably may have a turning point. Also, with this in mind, let's go to the so-called the price chart of oil. So for this case is WTI oil. All right, so this is a WTI oil price chart. So it has been hovering around here. All right, so like what my cycle chart is anticipating, probably we're going to have a turning point soon. That means that, frankly, the oil price has been quite uh, badly sold off. So probably we look at maybe a longer time frame of, let's say, 10 years. Sorry, let me just remove the top part of my RSI so that y'all will not be so confused. Let me just remove this. Okay, so this is probably I go to the monthly chart. Okay, so this is a monthly chart of oil, and probably let me just go a bit further so that we can have so-called, probably let's go back 1982 all the way back to have a gauge. Okay, so now let me just draw some lines. So probably we can draw a line here. Also, this is the so-called the resistance line. Then let me just draw another line, probably parallel to this. Yeah, sorry. Let me draw again. Let me draw this line here. Let me just pull it down. Very interestingly, we can see that we seems to have a channel line. All right, then now from here, let me draw some horizontal line over here. All right, I do see, of course, the lowest price for oil, it was in the 1986 and around 1999 of around $10. So over here, probably there's a support around $19. So then let me draw another line here. We seems to have a head and shoulder over here, and it broke the neckline, and whoa, it's all the way down. Also, based on technical analysis, I'm looking at a strong support around $19 to $20 over here, which is that's why right now the oil price I'm talking about WTI is hovering around this $20 mark. All right. Another thing I can share is this: the highest price over here is around 76. So I actually learned this from a very experienced commodity trader. They tell me this: or as long as from the highest price it dropped 50%, that means it will be at a good support level. If it can drop another 50%, then that will be a very, very, very strong support. So this is around $76 over here. So 50% down will be 38. Then another 50% down from 38 will be 19. That's why around $19-20 is going to be a very strong resistance. Support here. So with that in mind, ladies and gentlemen, so we now know that probably we're going to have a strong support around 19 or 20. So then based on my cycle chart, I know there's a turning point probably around towards end of this month. So with that in mind, that means what we can get prepared. So once the so-called oil price start to turn up from here, once it break our resistance, for example, very quick one. Let me just finish this.
Derick, end of the month means end of March or end of April? End of March, right?
Yeah, end of March. You're
So it's
talking about my cycle chart, right?
yeah, you're talking about the oil cycle, you said end of the month, so the month is this month or March lah.
Yeah, end of month, which is
All right.
March.
Okay.
All right. So if we draw some simple resistance line, so we know that probably there's a turning point towards end of March, and now we are at a good technical support around $19-20. So once the oil price break above this, well, we can choose to enter into oil. If that's happened, then if it goes up, it come down, break this probably support here. Let me just show you. If we break this support here, then probably we need to cut loss. All right, so this is how I combine cycle analysis, which tell me the turning point, and with technical analysis, I combine both to give me a so-called to let me design my trading plan, as well as to determine my risk-reward ratio, whether is it worthwhile to take this trade or not. All right, so this is for oil. Back to you, Benny.
Okay, Derek, while you have just finished your oil, maybe you can look at gold. But you can prepare that one first lah. Then
Okay,
I'll answer questions first. All right.
can.
Okay, so let me take a look at questions. You have any questions or what stocks you want us to look at? Just key in there. Now I know because on my phone I can only see some of the latest questions, latest comments. I can't go back to the old one. So if I'm answering some of the questions here, if I haven't answered your questions, please bring up the questions again. All right. And now if for those who wants the presentation slide that I prepare, click yes. Just say yes if you guys want it. I'll probably just do a post on the Facebook, and a comment on the Facebook. Then you are able to download from there. All right. Okay. Let me go through some of the questions. Now, here's from Weakness. How is accuracy of chart for the last 10 years? 90%. Weakness. If someone can get 90%, I think he's a damn good trader lah. Right. I've never seen someone who can actually get 90%. Because most of the traders that I know of, including myself, and again, it also depends on the period, right? For example, the Malaysian stock market has been in a downtrend since 2018, right?
Mm.
Now, of course, it's difficult to get a very good winning ratio because in the stock market you can only buy, right? You can only make money one side when the price goes up. It goes down, there's nothing much you can do unless you're shorting the futures market. So generally, I mean, based on my experience and based on my all my circle of trading friends that I know, they are looking at 60 to 70% kind of winning probability. Even in the best of times, they probably get about nearly 60 to 70%, right? But what they have, and what is what I learned as well. The most important thing is, again, the accuracy may be important, but it's not the most important thing. The most important thing is your reward to risk ratio has to be high.
Mm.
That's the main thing, because that will ensure your survival, right? Some years you get 50% accuracy, some years you get 80% accuracy, some years you get even, let's say, 30% accuracy. So if you get a good winning to risk ratio, you're able to survive through that bad period, right? So that's more important. So like I said, someone go 90%. I also would be. I also want to go and learn, lah, right? Um, okay. DJ Cha. Okay. Derek will attempt to answer the goal in a short while.
Okay.
Uh, uh, okay. Okay. Genting. Okay. One thing about technical analysis is this, right? Because sometimes if you look at most of the analysis, normally price is a very leading indicator, right? Because it's updated every single transaction, not every single day, not every single hour, but every single transaction, and anything can happen. The moment Donald Trump opened up his mouth, things can happen in market. Prices can change, right? But of course, our PM says something won't affect that much, lah. Maybe for local stocks. Okay, but anything can happen, right? So price normally discounts most news. So for me, if I'm trading, I don't really look at news a lot. News may affect the price movement in the longer term, but short term maybe not. The reason why, for example, why the market has gone down so much, right? Most of the market has gone down so much because they're anticipating, they're speculating that the coronavirus is probably going to be bad, and then market just sell first, right? And most of them are basically sometimes they're over speculating and price can go down even further. Okay, but at one point of time, the market will start to correct itself again when more data comes in, right? So the basically for me, I'm not sure whether it's for Derek, the news basically just explain what happened to the price, right?
Yeah. That's why there's a saying: buy on rumors, sell on news, ma.
So yeah, buy sell on news, right? Because the news explains why price moved that way. It doesn't tell you when is it going to move, right? So
Yeah.
that's a problem. Um, Now there were earlier questions talk about moving averages. Yes, um, you need to do some study because you cannot apply one moving average on all
Mm.
stocks. The reason being, different stocks behave differently. I mean, those who trade finance stocks will normally not be trading, let's say, penny stocks. There are different set of players, right? Even let's say you want to combine FA, you also need to look at what kind of stocks they are. Investment grade stocks behave differently from a startup stock, right, or a turnaround stock. So you need to have a different set of indicators to actually find the right trading plan for the stocks that you are trading. Same thing with commodities. All right. How to set up MA? So again, MA. I can't go and show you how to set the right MA right now. Maybe the next one, because I want to answer as many questions as I can. All right. Again, there's a way to set MA. And maybe I'll talk about this next week. All right. Okay. Derek, are you ready for goal?
Oh yeah, I'm ready.
Okay.
Okay. So now I'm showing the cycle chart of gold. Are you all looking at it?
Yeah.
Okay.
Got it.
So anyway, this is a cycle chart of gold. All right. So over here is probably we are going to see a turning point. If you look at my cursor, probably we are going to see a turning point. If we go down, it's also around late March or early April. So there's a turning point here. All right. So with this in mind, that there may be a turning point for gold in late March or early April. Let's go to the price chart. So this is the price chart of gold itself. This is gold. So we can see that in the technical analysis, we have a so-called resistance here around probably 1,700 US dollar per ounce. Then much earlier, actually gold price actually did a plunge to a low around here and here. So then after that, it rushed back up and hit this resistance. So this 1,007 proved to be quite a strong resistance, and it hover around here. So now with the so-called with the forecast done by my cycle chart that probably there's going to be a turning point. So at this point of time, probably I'm more looking at for gold. If we were to have a turning point around late so-called March, which is like right now, early April, if we have a turning point, I probably am expecting that maybe this resistance is not going to be broken. But if it were to turn down and break this support here, which is probably around 1611, so if you were to break this support over here, probably there's a chance for me to short gold, all right, to short gold. And once it break and close this 1611 support, and it may just come down. And if we go back and look at my cycle chart again, there seems to be some minor turning point around probably mid of April, and there's another minor turning point around end of April. So with this in mind, it seems that hey, uh, if this so-called cycle, so this price chart of gold, it were to break this support, it may come down. Maybe if come down, it just probably have a bounce. Then it may come back down. So from the low at it, if gold price were to break this support here, it may have a chance to come down and test this so-called support here over here, probably towards the maybe the end of April. Also, with this whole idea that I have in mind, then I will then decide my trading plan. Like I will want to short it over here, and I will need to determine where is my place to cut loss if I'm wrong, and then I have to make sure my reward is at least two times more than my risk of one. Let's say if I risk $1, I should at least make $2. If I risk $1, I can only make $1. It doesn't make sense, because if you want to risk $1, make $1, you might as well go casino. I think now cannot go casino, right? So if you want to do trading of stocks or any asset classes, make sure we have a risk reward ratio of at least 1:2 or 1:3. Also, this is how I can combine my cycle chart with technical charts to do a trading plan, and then to find out the risk reward ratio. Then if everything turn out like what I expected, then I will enter in that trade and act accordingly. All right. So back to you, Benny.
All right, I'm going to answer some of the charts, right? Some of you have been asking some charts. So let me just go to my screen. Faiz, can you go to my screen? Okay, there are questions about what moving average that I used. Okay, this is my default average. Whenever I start, I will use a 30-day moving average and a 200-day moving average. Now, that 30-day is about a month trade. So I'm looking at a month average. Okay, 200-day is more like nearly a year kind of average. And which is the reason why I use 200, because I think a lot of fund managers normally use 200-day average. Fund managers normally look at fundamentals, but probably the only average that they know is the 200-day average. So it's good to have the 200-day average on the chart. Paris, can you stream my screen?
Yeah.
Okay. So I'm just going to show you first of all, because we'll be asking whether the KLCI has already bottomed out right now. You can go to, I write articles actually on Borneo Post and also the Age Financial Daily. So if you look at articles on the Financial Age Daily on Wednesday, that's where I write my article, right? And I also write for Borneo Post. Borneo Post is a weekly paper. So you can go to borneopost.com. You can see my commentary there, which is exactly what I'm going to do now. I'm just going to show you a little bit. Now notice on this chart here, right? I have a red line. Can you see the red line there? That one is a 200-day moving average. So remember, I told you, if the price, in this case, the index stays below the moving average and has been staying below the moving average since August 2018, right? That's when the moving average also start to turn downwards. So from there onwards, you're able to see whenever the KLCI tried to go back above the average, it failed, right? Because the average is also a time when those who have not sold earlier, they start to sell again, because that's the average price, right? It's better to sell now because they are not expecting the price to go above average. It's a downtrend, so they'll start to sell. So you look at here, whenever it tries to go above the average, the index comes back down again. Okay, whenever it goes try to go and break above, and the recent one, when it tried to break above the moving average, the 200-day moving average, was the beginning of this year in January, but it failed, right? And then from there it started to come down back again, right? And because of the COVID, the decline accelerated and the price got down very aggressively. Okay. So now if you look at this one, the blue line here is the short-term 30-day moving average. And I also like a Fibonacci retracement tool to tell me how much has the market retraced. So if you go back to our earlier presentation last week, has the market bottom out? I've actually looked at this chart, right? In order for the KLIC to go back at least in a short-term trend upwards, it has to go above 1410. Right, that's where the short-term 30-day moving average is, and that's where the 50% retracement is as well. So it has to go above 1410. If it fails to break above 1410 or 1420, then you may see the downtrend continue. So that's my analysis. All right. Now I'm gonna also attempt to answer maybe one or two shares. Don't worry, we'll be back here again a technical Monday next week. So if I can't answer your questions, do come back next week. But I'm just going to show you one example now before we leave, because Derick will have to be in another session, a Mandarin session at
Yeah.
9:15, right?
Yes.
Um, so
Correct.
I have to I'll just take a look at one chart now. Some of you have been asking about Maybank, so I'll just go for Maybank first. Okay, so I'm just going to, in case for those who wants to use charts, right? You can actually go to investing.com. They provide free charts over there, right? So you can actually go to um, investing.com to get the charts there. Okay, let me see if I can get MBB. Okay, Maybank. Sorry. Okay, so what we have now is a Maybank chart, right? Now, one of the things that I consider normally is also, if you want to trade, right, it's not just purely technicals alone. One of the things that I look for normally when I'm trading is also a sector play, right? For example, if let's say now, I mean, for me, and I've been talking about this since we started the forecast earlier. The only sector that is currently bullish is basically the glove sector, right? And we
Mm.
know why glove sector, lah, right? So I will normally, if this kind of thing, I will follow the trend. I will follow the where the play is, where the smart money is, and I'll follow that trend. If you ask me, Maybank now, I think is a little bit difficult because of the moratorium thing. Uncertainty. Interest rate is going very low. You're probably going to have NPLs getting bigger, higher. All this uncertainty. Normally, if you ask me, I would not touch Maybank, lah. Right? But if let's say this is any other counter now, if you look at this, normally if the price moves way below its average, or it can be way above the average, lah, if the price goes way below the average, that means there's over speculation, right? Like this part here, this is over speculating. There's a fear in the market. Yeah, but the good thing is this, right? After the price fell down, you can see in the past 2 weeks, Maybank starts to actually found some footing, right? It started to go sideways a little bit. Now, this is still not a indication that the market has bottomed out yet, right? Normally what we want is this: when the price starts to go sideways, it will take maybe weeks, okay, or maybe a few days or weeks, and this is a time where normally volume will start to become lower. Now if you can look at the bottom chart here, the volume has gone lower, isn't it? Right? It's good if it's really quiet and the price is not going anywhere, then you probably have found a bottom. Okay, now let's say if I were to apply a trading plan on Maybank, let's say lah, okay, you can do this on any counter. Now, we all know that the average price, okay, this is the 30-day average, the short term is the monthly average. Currently is at 797, for example. So I'm just going to put, just have to remember 797 over here. Okay, 797, that's where the 30-day moving average is. I'm just going to put a line there, right? The price currently is 731, correct? Now, the lowest price that we see since the sell down is at 7 ringgit. Okay. Um, so now, very simple, right? If I wanna trade on a rebound, right? There are many strategies you can actually trade on rebounds like this. If I were to buy Maybank at 731 now, right? If I were to buy seven, I'm not saying that you have to buy now. I'm just saying if, right? But if you ask me, I will not, because again, this is not a sector which is currently favorable on the upside. But let's say I buy 731, my expectation is what? Price go up, isn't it? That's my expectation. And the next question is, if it does go up, how high can it go? Right?
Mm.
Now, I will not say, of course, for a trader, if I'm going to buy, I want to put as high as possible, but we have to be very realistic, right? Now, if I'm going to put the high at 797, for example, because that's where the 30-day average is. If the price rebound, it may go back to the short, at least to the short-term 30-day average. I will not even think of it going back to the long-term 200-day average at 855, because that's a long-term one, right? But let's say 797. If it does rebound, that's my expectation. Go to 797. So if you take 797 minus 731 at this current price, there's a potential profit to be made here about 66 cents if I buy at 731, right? And if the price goes up, I can make potentially 76 cents. But what I would not expect is the price to go below 7. Because if it goes below 7, that means a new low is being created. If it's going lower, that means it's going lower. I have to get out. That means the trend is still going down. Because when I buy, my expectation is price should rebound from current price. So if I'm going to buy Maybank at this level, 731, there's a potential to make 67 cents, right? Now, if I'm going to sell, if the price breaks below 7, okay, let's say 16.99 or 16.98, I'm going to lose about 32, 33 cents. So if you take 67 cents, your potential profit, divide by 32 or 33 cents, you get a potential profit of 2 to 1, right? So if I'm going to buy at 731, so at least if it does rebound, there's a potential for me to make 60 cents, but my risk will be 30 cents. Okay, so what happens if you buy now and the price keeps on going lower? You're going to lose that money, right? But if you keep on doing this, okay, if you keep on doing this, a few trades, maybe even if you win 5 times and you lose 5 times, you can still make money, right? Because your reward to risk ratio, your wins is always more than your losses. So that's the idea, right? But of course, if you want to apply on a chart, make sure you apply on a chart that is in a play currently, not like Maybank. All right. So this is just give you an idea how we use technical analysis, right? Of course, this is just a simple explanation. When I start to I do trading, I'll actually use a few more other indicators, right? A few more indicators to put in so that you get a better idea or clearer picture of where the price is going to hit. All right. So that's the Maybank. I mean, you can apply this later on all shares. But the good thing about technical analysis, we do conduct classes on technical analysis. In fact, we just started this year, but because of the coronavirus thingy, everything we have to be at home. But now is a good time to actually learn some stuff first, and also to to get to know about technical analysis and what it's all about. All right. Um, I'm afraid we have to end here. We have a
Yes.
Mandarin session later on at 9:15 in 5 minutes. So you can go to our Equity Tracker Mandarin page. That's where you see Derick again. I'm yeah, I apologize that we can't answer so many questions because today is the first day. The next session next week on Monday, we will just be answering your questions. All right. So don't worry about it. We'll still be here until the lockdown is over. All right. So if you have any questions, go there. I'll try to answer some of the questions after this on the comment section. But if it requires a slide, bring this up again next week. And once again, for those, please do share this Facebook, our Facebook, so that more people is able to learn from this. Because we are really committed. As long as we are in the MCO order right now, we will still be doing this on a daily basis. So we have set aside actually Mondays to be a technical Monday. That's where myself and maybe Derick, if you can join us, or we could get another guy who's technical as well to join us next week. right? And again, for those, Derick is actually having a class or a webinar, right, for exclusively for their members. All right.
Yeah,
Um,
actually, every Sunday night I have weekly market update webinar for my timing and you members. So, but because I'm working very closely with equity trackers, so that's why for this Sunday's weekly market update, I'm actually opening up five free slots for timing, not timing, equity trackers, or even those who are watching this webinar to join me this Sunday at 8 p.m. Yes, but how are they going to get it, Benny?
okay. The first person, the first, how many? Six, six people, 6 person, is it?
Five or six?
Five only.
Six, six.
Okay, last. Okay, the
Yeah.
first 6 person who tag, you have to tag your friends. Tag 10 of your friends right now. The first person who tag, the first 6 person who tag your friends now, you need to have at least 10 friends tag 10, no less, no more. 10. Then we'll take a look at who actually tag their 10 friends, and Derick will give you a free entry to his exclusive webinar
Yes.
session next Sunday, which is only for members. Because if you want to go in, you have to pay 28
Yes.
US dollars.
Yes.
So this is going to
Please
be free.
don't tag me or Benny. Doesn't count.
Yeah, don't tag me or Benny. So please tag your friends right now. The first five, the first six, we will get in touch with you and how you can get that the entry ticket. All right. So now, for those who are still new with us, we're gonna do this on a daily basis. Tomorrow, we're gonna have a very special guest. Right. Now, you've probably heard news about high supply for condoms and low supply, high demand for condoms. Right. The news talking about, has the world doesn't have enough condoms. So tomorrow we will have a guest. Right. He's the chief group chief executive officer, right? MK Go from Kerex, who will be joining us, right? To talk about the condom industry, how COVID affected the condom industry. We all always talk about glove, but now we're talking about condoms. And how Kerex is, what is the strategy moving forward, right, from the current situation. So do join us tomorrow and tag your friends and invite them to come, because this is the only time you can actually communicate or talk to a CEO of a public listed company. And we are talking about CEO of the largest condom maker in the world. All right. And if you like to have access to equities tracker platform, do WhatsApp us at this number 8408 2070. All right, this number, to gain access until the end of April, and to also download a number of downloads that we, information that we actually share. All right. And those who want the slides as well, please, it's not going to available now. It's going to be available tomorrow. So text us again or message us at that number. Okay. Then you should be able to see today's slides in the WhatsApp as well, where you can download. Okay. I
Yeah.
think it's
And
really.
also my ebook. I offer free ebook as well.
Oh, yeah. Yeah, you can also get Derick Tan's ebook here. You go here, you should be able to see his ebook there as well. You can actually download his ebook. All right. Okay,
Okay.
that's all the time we have. Thank you so much. Please join us on our Mandarin session in a short while. Derick will be
Yeah.
there.
I'll be heading
Thank
to
you.
Penang. Yes.
Right. Thank you,
Okay.
Derick, for joining us. Hope to
Take
see you
care.
again.
Thank you,
Right, and
everyone.
see you guys tomorrow. All right. Thank you very much.
Be safe. Take care. Bye bye.
All right. See you, Derek.
Yeah.